The MP2 pag-ibig fund and interactive brokers, these are just some of the popular investment tools that you guys keep asking me about. And as much as these keep coming up in my comment section, I just haven't made any videos on them simply because I haven't invested through them. Now, don't get me wrong, I do see these investments as very valid and very attractive investments. But for my own personal use, I just don't see them fitting quite well with my total portfolio. So in today's video, this is what we'll look to cover. I'm letting you know why I don't invest in the MP2, interactive brokers, and other popular investment options that we have out there. This is not a neg on these investment options that you have, and if you are invested in them, that's completely okay. But for me personally, I'm just letting you know why it doesn't fit my own personal investment goals. If you're curious, stick around and let's find out. Let's go. But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. So again, I haven't covered MP2 and interactive brokers on this channel because most of the stuff that I talk about are actually investments that I have first-hand experience with. I'm not a certified financial expert. I'm just sharing my investment experience in the last 20 years. So now with that out of the way, let's now move on to the three popular investments that I minimally or maybe completely do not invest in. If you're watching this and are already familiar with my older videos, you know that I actually tend to invest more in the global markets rather than the Philippine market. I am invested in the Philippine market. It's just that it hasn't worked out for me as well. I'm sure there are a lot of you who can relate to this. So this isn't really an issue about not being patriotic. For me, I'm an investor and I just really want good returns on my investments. And as much as I really wanted these investments to work out, I just haven't had any great returns. I mean, case in point, I have the ALFM Philippine Stock Index Fund. Starting 2016, I've put in over 75,000 pesos in this. And now, its current value is just over 63,000 pesos. So this is a return of negative 15%, just under 12,000 in negative value. And the other is the ALFM Growth Fund, which is a balanced fund. This one, I've invested a total of 118,000. Its current value is just at 96,000 pesos. So this is a loss of negative 22,000. In percentage, this is almost 19%. So combining these two, an investment of over 150,000 pesos, my returns are actually at negative 33,000 pesos after 9 years. And the sad thing there is that if I had put this same money into the S&P 500, I would have easily doubled this in this amount of time. So my 150,000 pesos would at least double to 300,000 pesos. That's why I'm an advocate of the global markets versus our local market. And don't get me wrong, there's actually money to be made in the local market. I mean, I shared with you in many videos ago that I actually made good returns in individual stocks such as MPI. But from my view, I think making money in the local market is really more about trades. That's not my own personal style. My personal style is to really keep investing and seeing growth over a long-term period. I feel like with global markets, we're able to really invest in the long run. So for me, the local market just doesn't jive with my own personal style, my investment horizon, and the way I would like to keep investing. So let's move on to number two. Let's now talk about IBKR or interactive brokers. Interactive brokers is a global stock trading platform where you can, of course, buy US and global stocks. Unlike what I've been advocating by investing in pooled funds that are run by banks and mutual fund companies, investing through IBKR lets you invest in individual stocks directly. So this may be Google, Amazon, Facebook, what have you out there. So this is a very good value proposition. You cut out the middlemen, the banks, and the mutual fund companies, and just invest directly in these global stocks. So you cut out fees that the banks are imposing. The downside is these apps are actually not registered under the local SEC. I mean, they are able to operate over the internet and able to integrate with your bank. But in terms of registration, at least as of the time of the shooting of this video, these apps such as interactive brokers just don't have a real registered entity locally. While I was actually advocating this in the past, I was using eToro and GoTrade. Last year in 2024, the SEC asked eToro to shut down its Philippine operations. I mean, it wasn't even really operating locally, but basically the Philippine government asked eToro as the platform to shut down all accounts that were registered in the Philippines. So this affected me and a lot of you as well. Pretty much we were asked to wrap up, take your positions, sell them, or else you may not be able to liquidate them. So investing in these apps, these global trading platforms, have no assurance in being able to operate continuously. I mean, if you're watching this and you are an OFW based abroad, you may check what's locally available to you and you may have better options, less restrictions. But if you're watching this and you're in the Philippines, just know that these apps don't have a firm standing here in the Philippines, and anytime you may be asked to again wrap up, liquidate your positions. Personally, I'm surprised that GoTrade and Ibkr are actually still around. I mean, last year when the SEC came out with that firm stance on eToro, I was actually expecting the other apps to follow suit. Maybe fortunately, they have not yet gone after the other apps, but I'm just letting you know that that's always a possibility. The local stock market did announce that they were coming out with GPDRs, or Global Philippine Depositary Receipts. Supposedly, this is where we can buy global stocks through local brokerages. But this announcement happened maybe a little over a year ago, a year and a half, and it still hasn't happened. So that's why if you notice, everything on this channel moved away from recommending eToro, GoTrade, knowing that at any point, the plug can be pulled from their local Philippine operations. So that's why I haven't invested in Ibkr or Interactive Brokers. So lastly, let's move on to number 3. Let's talk about the very, very popular MP2. So I won't get into it that much. I mean, you who are watching this are probably a strong advocate of MP2 already. You already know what it's about. But to summarize, it's a glorified savings account. Historically, it's earning about 7% per annum, and this is even tax-free. And as a savings account, you are of course guaranteed the preservation of your capital versus UITFs and mutual funds. As shown earlier in my ALFM growth fund, your capital, your seed money can actually go down and be in the negative. So MP2 is seen as a way to really grow your money at assured interest rates, and with the peace of mind that your capital will actually be appreciating, will not be at a loss at any point in time. Sounds good, right? So why don't I invest in MP2? Well, let's look at the two options that you have when investing in MP2. The first one is the annual dividend payout. At the end of 1 year, you are able to withdraw that interest, that's 7%, while the other option for MP2 would be reinvesting the dividends over a 5-year period. So in option 2, you are actually earning those dividends as well, but instead of withdrawing it to your account, that dividend actually gets reinvested in the same pool. So by reinvesting the dividends, this is the magic of compounding interest. You are actually snowballing your seed capital and being able to just grow it in a more exponential way. With these two options in mind, let's now talk about why I don't invest in MP2. For both options, I actually have investments that are in place of them and somewhat mimicking what I would want for either of the said options. So first, for MP2 with the annual dividend payout, what I actually invest in, and you already know this if you've watched my previous videos, I invest in the ALFM Global Multi-Asset Income Fund. When comparing to the MP2, the ALFM Global Multi-Asset Income Fund actually has a lower dividend payout between 5 to 6%. But the main difference of the Global Multi-Asset Income Fund is that the dividends are actually paid out on a monthly basis. So as opposed to the MP2 where you are waiting an entire year to get your dividend payout, the ALFM Global Multi-Asset Income Fund is actually able to credit this into your bank account every 15th of the month. I mean, effectively, it's a lower dividend payout, but this coming in monthly means that I have flexibility with it. I mean, I could reinvest this, I could use it, and while the dividend payouts are actually lower at 5 to 6%, there is also a possibility of your capital appreciating on top of the dividend payouts. Of course, there is also a possibility of your capital depreciating. I mean, when you are invested in funds that are invested in equities, in this case, it's a balanced fund, there is still a chance that you may get some capital losses, but that is a risk that I'm willing to take. What I've invested in this fund is 140,000 pesos. Its current market value is over 147,000 pesos. So this is an unrealized gain of over 7,000 pesos or over 5%. what I've earned here in terms of my capital is still on top of the monthly dividends that I'm earning. So if I've been earning 500 pesos monthly in the last 2 years, I've earned over 12,000 pesos in terms of its monthly dividends, but also in terms of capital appreciation, there is again that unrealized gain of over 7,000 pesos. Again, this fluctuates. There are times wherein the capital is actually at a loss, but currently, if I were to exit this right now, I would be gaining over 7,000 pesos in terms of capital appreciation. Again, it's a possibility, not an assurance. If you cannot risk your capital at any point, MP2 is better for you. For me, for this need for regular dividend payouts, I just see the ALFM Global Multi-Asset Income Fund as fitting my personal goals and style. Now, let's move on to the more lucrative option 2, wherein the dividends of MP2 are reinvested. So for this portion, we're no longer looking at the per annum interest rate, but we are now looking at the total value of the investment after a period of 5 years. So I had this computed. Had you invested 100,000 pesos in 2020, if you go with option 1, what you would have gained in total is over 33,000 pesos. So the total value of your 100,000 pesos would come out to over 133,000 pesos. When you reinvested dividends after a 5-year period, your 100,000 pesos in 2020 would be over 137,000 pesos in 2024. So after a 5-year period, option 2 has an effective cumulative gain of over 37%. So that's actually very good. Option 2 is really about long-term investing and not touching a centavo on your investments and really just making it grow in the best possible way. So if I were to put my money and not touch it for over 5 years, I would rather put it in the S&P 500. I'm invested in the S&P 500 through the BPI US Equity Feeder Fund and also through East West Bank's S&P 500 Equity Index Feeder Fund. So again, option 2 is really about not touching the funds anymore, not getting any dividends. Had you invested in the BPI US Equity Index Feeder Fund 3 years ago, your returns would be over 84% for the Class A, which is the USD denomination, while for the peso denomination, the cumulative return in the last 3 years would be over 83%. So in terms of actual value, if you had put in that same 100,000 pesos in the last 3 years, your 100,000 pesos then in 2022 would be over 183,000 pesos already. That is a gain of 83,000 pesos just in the last 3 years. So when we're looking at the BPI US Equity Index Feeder Fund in the last 5 years, its unit value was at 103 pesos, while now its current value is at 253 pesos, meaning that in just a 5-year period, the gain of this fund is over 150%. So your 100,000 pesos in 2020 would be over 250,000 pesos now. So that's really the magic of the S&P 500, and that's what happens when you invest in global equities. Just as a disclaimer, the S&P 500 and the global markets are at an all-time high right now. People are actually afraid that it's gonna go down. Yes, I do understand the apprehension and perhaps the market is overbought, probably artificial, but just basing it on returns of that value, you are comparing 150% on one hand, and the other for the MP2, the returns are over 37%. Again, 37% is not bad. That's actually very, very good. That's more than decent. But if you're really swinging for the fences, wanting your capital to grow, the S&P 500 with that 150% return is just almost incomparable. So for me, why don't I invest in the MP2? It's somewhere in between the ALFM Global Multi-Asset Income Fund, wherein there is regular dividends, and the US Equity Index Feeder Fund, the S&P 500. My goal here is monthly dividends, dividend payouts, while the goal here is super capital appreciation. The MP2 would sit somewhere in the middle. And for me personally, I just think that I don't have to invest in the middle ground. I can invest in either. Again, this would be more for people who are okay with some capital depreciation sometimes. It does fluctuate. There is volatility. The MP2 is better suited when you just don't want any depreciation that happens to your capital. And you might be thinking, why not just invest a little in MP2? I mean, if you could, why not? Well, yeah, also, that's fine. I could. But I guess there's always been also some hesitation on my end. I don't know. I just haven't had a great experience with our Philippine government. I mean, I honestly just trust the banks, mutual fund companies more. Even if there are charges, there are taxes to be paid. Even with taxes factored in, working with the banks and mutual fund companies still come out better. That's just for me. I guess it's a matter of who you trust more. I don't want this to be a political piece, but for me, I have better peace of mind knowing that it's being run by investment professionals in the banking industry. Some of you probably agree, some of you disagree, and we can agree to disagree. But again, I'm just sharing my own personal take on this. So that's about it. So those are the popular investments that are out there that you might have been wondering, why don't I cover it in this channel? Each one of us has their own objectives, investment goals, and risk tolerance, so it really differs. So what do you think about this? Do you agree with me that I'm foregoing working with these apps and also not investing in the MP2, not because I don't see the value, but again, it sits in a middle ground wherein I already have investments covering what I want. Let me know in the comment section. If you like this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing!